Hello, and thank you for joining us at xm.com for this Forex Preview video. I'm Cristina Marucos. Joining me today is investment analyst Cristina Bartenido. We'll be looking at the Chinese data expected this week. So it looks like it's going to be a very busy week regarding Chinese data. And even though earlier in the year we had some positive data, it appears now that growth momentum is stalling. Is this reflected in the data released so far?
Indeed, Christina, China's economy expanded at a steady rate of 6.4% from a year earlier in the first quarter and slightly higher than expected, and that somewhat eased concerns over a slowing economy. But getting into the second quarter, we saw industrial output, retail sales, and fixed investment all sharply slowing down in April. Perhaps a weaker exchange rate was partially responsible for that, but still the size of the decline has definitely increased worries about the domestic demand and growth momentum in the second quarter.
Now, China will report new data on industrial production, retail sales, and investment early on Friday. Now, how do you expect the ongoing trade war with the United States and, of course, the uncertainty this inflicts in the markets to affect the data in these reports?
Well, markets expect retail sales and industrial output to rise, though not significantly, and a steady expansion for fixed investments. Probably the government stimulus program has provided some comfort to consumers and businesses, and apparently the trade war pushed companies to rush out with their shipments before new trade tariffs come into effect earlier this month. But still, even if the data come as expected, the measures will remain close to multi-year lows, pushing the government to take more actions to stabilize the economy if global uncertainty widens further.
Now, staying a little bit on the topic of the trade wars, President Trump announced that he's ready to impose another round of punitive tariffs on Chinese imports if the Chinese leader does not meet with him at the G20 summit later this month. Do you believe a deal can be reached? And if not, how is that going to affect the markets?
Exactly. Washington is ready to impose new tariffs on additional $300 billion of Chinese goods if the Chinese president Xi doesn't meet Trump at the G20 meeting in 2 weeks. Of course, a meeting doesn't guarantee that trade relations could soon improve. I think that there are more things to discuss, including U.S. national security and the ban on Huawei. And that might take time before a final agreement comes on the table. What is certain, though, is that another delay would increase demand for safe havens and add pressure to risk-sensitive assets such as the Australian dollar, increasing chances for rate cut by major central banks such as the Fed.
I see. Cristina Bartenido, thank you very much for joining me today, and thank you for watching us at xm.com.